So today I'm just going to go through about something that's been driving the markets pretty much this week and last week, and you can see it on the board. It's Greece. At different times, different things drive the markets. At the moment, it seems very much to be about Greece, about oil, about the ECB, and about the Fed. And we've covered the Fed no end. We've covered ECB no end. I did an oil market overview a few weeks back, so now I'm just going to go through some of the stuff with regard to Greece. I'm no Greek expert, that's for sure, but right now it is very, very important to appreciate what's going on, as Greece is very much impacting the markets we trade. I'll therefore aim to broaden your understanding of some of the political and economic climate in Greece. So first I'll go over the key facts, then the economics behind the Greek crisis, the politics, the differences with the previous Greek crisis, a potential Greek exit and the consequences, and some of the problems it causes for ECB policy. And I'll finally finish with a bit about how it impacts the markets. So this is not really about trading as such and trade setups and strategies and things like that. It's more having an overview of what's going on, so you can use your knowledge and understanding to seize upon opportunities that arise. And if you don't have the background prep, if you don't know what's going on, you won't be able to trade anything that comes out, any comments, any opinion polls, or what have you. Okay, so key facts. It's just more for an overview than anything else. Population of Greece is 11.3 million. It's a fraction, as you can see, of the EU total of 505 million. It ranks 13th out of 19 Eurozone countries in terms of size. Unemployment rate 25.5%, but youth unemployment is 49.5%. The economy shrank by more than 20% during the crisis. Gross government debt is 175% of GDP, with the EU average being 87%, and 33% of Greeks are at risk of poverty or social exclusion. Now, I've pretty much read what's on there, just to essentially give you a bit of a guide to, I guess, the poor situation Greece is in at the moment. So the economics behind the Greece crisis, or the Greek crisis rather. Greece was living as well beyond its means well before they joined the euro in 2002. Public spending soared as euro stability encouraged lending, with, for example, the government running up huge debts to, say, fund the 2004 Olympics. I don't know if any of you watching the news, or you probably was 10 years ago, some of you would be pretty young. But, you know, right until the launch of the Olympics, they were running in debt, and it cost, I can't remember, but 3-4 times more than it was supposed to cost. Probably more, actually. So that's kind of some of the, I guess, laissez-faire kind of spending that Greece did to fund the Olympics. And that Olympics is just one example of how they've overspent. Greece failed to tackle widespread tax evasion and wasteful inefficiencies, especially in the bloated public sector. Again, public sector wages, for example, rose 50% between 1999 and 2007, well above inflation, well above most developed countries. The budget deficit, that's the difference between spending and income, really spiraled out of control with the widespread tax evasion hitting the income side, and to add to the overspending from things such as the Olympics and what have you. Much of the borrowing to fund the spending was concealed, as successive Greek governments sought to meet the 3% of GDP cap on borrowing that was required to be part of the euro. So what happened was, basically there were 5 different criterias. I think they were called I don't think they were called the 5 golden rules, but that's what they were seen as, to meet entry into the Eurozone. And Greece didn't actually meet these. but still were allowed in. And it was 3% of GDP was a cap on borrowing that they had to meet, and it was only really during the 2008 financial crisis that revealed that the Greek debts were far greater than this, and they'd been misreported essentially. So this came out during the crisis. Greece needed an emergency credit lifeline to stay afloat. In 2010, the EU and IMF granted Greece a massive 110 billion euro loan, and in 2012 a further 130 billion when it became pretty apparent that more help was needed. The EU IMF bailout was conditional on the Greek government enacting high austerity measures, so drastic spending cuts in healthcare, education, and other public services. So that's a bit behind the Greek crisis and where we're at. But 2014, Greece did finally emerge from 6 years of recession, with predicted GDP growth of around 0.6%. But still, any prolonged political uncertainty puts this kind of fragile recovery very much at risk. So has anyone got any questions regarding kind of the background? Is for you guys, were you aware of this? Is this something that you're unsure about, or basically any questions? Okay, if there are any questions, just please stop me, because a little bit of this is economic, and obviously not all of you have an economics background, which is absolutely fine, which is why I'm here, to try and explain things if you don't understand them. Okay, so the politics of it all. Okay, Greek politics are very volatile, and especially now as anti-austerity parties are challenging the old establishment. The main parties, which is very important to be aware of who they are, what they stand for, because if you see comments, if you hear comments, you need to know, are they the anti-austerity party, are they the current government, and what have you. ITC have actually done a very good piece summarizing all the main parties in Greece and who leads them and what they stand for. But the main two are the New Democracy, which is the current Greek government, which are conservative and currently in power, and they're led by the Prime Minister Samaras. And the other main one is Syriza, which is a radical kind of anti-austerity, anti-European party led by Alexis, I think it's Tsipras. I'm not 100% sure how you pronounce his name, but I think that's it. So on the 29th of December this year, a snap election was triggered in Greece, because basically the Prime Minister Samaras failed to get his nominee that he elected for president elected, essentially. So what happens in Greece is, if you can't achieve this, an election is called, and this election is going to take place on the 25th of January, which is three days, I believe, after the next ECB meeting. So that will have implications for the ECB, I'm sure, but we'll talk a little bit about that later. So the political clash, which I've called it here, had been brewing for a little while, which ultimately caused the Athens stock market to slump, and also pushed long-term bond yields up 4% from 6% to 10% in the last 3 months. I mean, although we've only had the election called as recent as a couple of weeks ago, this has been brewing for a little while. There's been a lot of uncertainty in Greece regarding the presidential candidate, and it's during the last 3 months we've actually seen quite a big rise in Greek 10-year yields, as this chart will show. So as you can see from this chart, so where are we? Greece, this is only going up to November, but I'm telling you now they're at 10%. So we saw September onwards, Greece went from essentially 6% yields to 8% yields to 9.5% yields, and now in the last few days we've gone up to 10% yields. Now, relative to kind of what the Bund has done, this has gone essentially 400 basis points, 4 percentage points. The Bund can't move 4 percentage points from here. Does anyone know where 10-year German yields are at the moment? Roughly. 0.5. 0.5?
Yeah, just below.
Yeah, exactly. So if Greece is going to get back to where it started there at 6%, that's 400 basis points. That's, if the Bund was going to make that same sort of move, it would be negative 3.5%. So that's just a gauge of, I'm just trying to get across to you the magnitude of the moves we've seen in Greece. And this has only been Greece up to now, because as these charts would show, the Portugal yields, Italy yields, Spain yields, German yields, they haven't moved up. So, you know, I'd consider Greece part of the periphery, Portugal, Italy, Spain part of the periphery, but it's not been a peripheral bond move, it's just been a Greek bond move on this uncertainty. So I think it's important to bear this in mind. Where are we? Sorry, I just want to get back to where we were before. Okay, so Syriza, the opposition government, well, not opposition government, but opposition political party, they still look capable of winning. They're currently slightly ahead in their election polls, but ultimately they still need a coalition to form a government, so they need some allies, because while they're ahead, they don't have a majority, which is what they need to form government.
How is the election working? Is it like 2 rounds where you need the majority to win?
Yeah, you do need, like, you do need the majority. So it's not, it's kind of,
so like
it's like in the UK.
After the first round, they're gonna make coalitions.
Yeah, I think I'm not 100% sure exactly how it works like that, to be honest. Anyone elaborate?
The first elected official party gets more seats in the parliament.
Yeah.
But still, to govern, they need to have the majority. So they need to have a coalition, smaller.
Sure. So it's essentially a bit like the UK.
Now,
Yeah.
So
yeah, exactly. Because
they're formed in a way to form a bigger coalition.
Exactly, because they need a majority, so they need over 50%. And
do you know what was the last polls?
There's been so many kind of, I don't know what's official and unofficial, but it's been somewhere between 2 and 3% that the Syriza party has been ahead as of 2-3 days ago, I think. Okay. So it's not huge, but it's significant enough.
Do you know what was the exact story of the night? Because it was something about Greece. No? At 1 a.m. the S&P rallied 1500. I thought it was about.
Was that about Greece?
That's what someone told me this morning.
I'm not sure that was about Greece. It might well have been, but if it was, I've missed that. Anyone else can elaborate? What did you hear about Greece come out?
I thought it was something about the last polls. Greece.
No, might possibly have been. If it has been, I've missed it. But
so yeah, I don't know what happened.
there's a lot of other guys in here. Anyone else hear about this?
Yeah, there were some polls. I think I saw it on the IPC as well, but I'm not sure that affected this.
Yeah, it's very unlikely Greek polls will affect the S&P. Maybe the Euro stocks. Well, obviously that Euro stocks moved anyway, but I'm not sure that that's the reason, to be honest. But correct me if I'm wrong if you find out, and definitely let me know and let the group know. So as I said, I've lost my train of thought now. Yep, the Syriza government, they do need a majority, and so they will have to form some sort of coalition. So if elected, they probably would need to, they plan to renegotiate the bailout that they've had from the ECB and other countries, but to get at least half of the debt written off. But I mean, you know, if I borrowed you money, or if anyone's borrowed you money, you really think that the ECB or France or Germany or whoever's borrowed that money is going to say, yeah, it's fine, don't worry if you don't pay it? That's essentially what the issue is, and that's what Syriza are trying to achieve, basically, is trying to get some of that debt written off. Their anti-austerity, basically, very anti-Europe as well. So the EU lenders will insist that Greek pay back the money that they've been lent. Fair enough. And this is a risk to the whole European Union, because if Greece don't pay back, then why should others if they're in trouble? So the Greek government ultimately say that a vote for Syriza risks endangering all the hard-earned progress that they've made. In 2014, Greece managed to achieve a budget surplus, and also, as I mentioned previously, positive GDP for the first time in a while. The Greek Prime Minister also warned if there's no stable government, the country would run out of money in weeks. I think the bailout has only, I think, another couple of months to run, which ultimately would leave the future of Greece very much uncertain if Syriza decided not to pay that back. So the difference is with the previous Greek crisis. In 2012, there was... Sorry, has anyone got any further questions before I go on? In 2012, there was a lot of talk about possible Greek exit, Greece leaving the euro, which the worry was ultimately it could trigger some sort of contagion, with investors jumping away from other struggling Eurozone countries. At the time, there were many that were struggling, Spain, Portugal, Ireland, Italy, just to name a few. Thus far, this hasn't happened this time around. There hasn't really been the worries of, as represented by the bond yields. You've seen Spain, Italy, they haven't sold off, yields haven't jumped higher. So a gauge of how any contagion is feeding through to other countries is ultimately if you see these yields go up. Generally risk off, what happens? Portugal yields go higher, market sells off, Italy yields go higher, BTP goes higher. We've seen a little bit of this in the last couple of days, but nothing too significant, not like how we've seen there. Is that clear about the risk premium associated with it and how uncertainty? It's essentially, when the markets trade risk off, risk on. In a risk on market, risk off market, what generally happens? Peripherals sell off, yields higher. Core markets, Bund rallies, yields lower. Equities sell off. And I guess commodities make their moves as well, but commodities aren't so relevant to the Greek situation. So,
sorry, Imran.
Yeah.
If you can see the slope start to kind of going up since September, more or less, why so early?
Well, because there was that. Because I mentioned about how the Samaras needed to put forward his presidential contender. That didn't go through. So basically, there were signs the last few months that wouldn't happen, and also all the troika stuff. That too. There's been a lot of unrest in Greece the last few months. Yeah, it's a different risk altogether. But ultimately it's political, because as time grew nearer and it was kind of got perceived that Samaras's candidate wouldn't actually get passed through, then what's the next step? This snap election, and it was only end of December that this got called. But that's why you've had that spike, and during that time, the stock markets you probably heard random comments from ITC and on Squawk and on Broker Talk about Athens stock market getting absolutely smashed. And at the same time, if I had I don't have a chart, but I had an equity chart, you'd see the same sort of thing. Yeah, in the same period.
Okay.
So why is it different this time around? Eurozone's in stronger now than it was previously. It's put in place quite a few financial buffers to absorb the losses that would be generated with any default. If Greece were to, I guess the word is default, which that's what we're talking about, or even be forced out of the euro, the losses to Greece would be shared amongst the Eurozone countries, whereas last time it was essentially whoever Greece had to pay would be the ones to suffer. So it can't really bring countries down per se, because it's a more equitable distribution of the risk. Yep.
So if they chose to leave, they could essentially bankrupt themselves and wipe all their debt off and just start again.
Yeah, they could, but they could, but they need to. yes, that's right. Essentially, they could wipe off their debt, but they can't really wipe off their debt. You know, it'll collect. You know, there's problems in Greece at the moment, but they need help because they're still in a very fragile position. They need help. There'll be some legislation that they have to pay essentially. Also, they'll go back to a Greek drachma. Say, what will happen? That will massively devalue. Who's going to put money into Greece? Who's gonna lend to Greece? You know, it's a dangerous precedent to set. Obviously, Syriza, they don't want to leave, but they just want to renegotiate. Essentially, it's not in their interest to be wipe out themselves, but they're kind of very much against the terms of what was the lending before, because Greece are massively in debt, so they're going to struggle to pay it off. And this is causing mass problems in Greece because, how do I explain this? I guess because it's a struggle for Greek people. Like I put that fact up about poverty, you know, in Greece, because they've got no money left essentially, and that's why they want to just, they think the terms. See, they're a radical party, right? They were contesting before in 2010 during the Greek crisis time. They were contesting as well. They didn't make it into power, but they never wanted to agree to this stuff in the first place. And now their argument is, well, how they're trying to win this election is, well, we agreed to this, we've had this bailout, but it's really badly affecting our country. At the time, they didn't have the proof to show that, but now they've got a bit of, you know, nothing's really, if anything, yeah, we're financially a bit better, but you know, there's still poverty, there's still huge high unemployment, youth unemployment. You know, it's not great for Greece. So now the EU this time around has a 500 billion firewall called the European Stability Mechanism, which can disperse emergency funds if needed. Some of the worst hit Eurozone economies in 2010 to 2012, notably Ireland and Spain, are performing a lot better now. So it's different to last time round. Greece itself has managed to balance its budget for the last 2 years. It still has huge debts though, of 319 billion. Although it did achieve a budget surplus of 1.5 billion this year or last year, which was the first since 2002. What's 1.5 billion in the scheme of 319 billion? It's not even a percent. It's a long way to go. So Greece is still, I guess this answers your question, Greece is still dependent on international credit because no one will lend to them given their poor credit rating, and if they default, certainly no one will lend to them. So they're in a bit of a vicious cycle. Okay. So, term Grexit and the consequences, pun on Greek exit, obviously. So Syriza, like the traditional mainstream parties, they say they want Greece to stay in the euro, but their message of ending austerity politics doesn't really fit with this. And this is where the problems are arising. Most of the European political establishments they've staked a lot of credibility and spent billions on keeping Greece in the EU, bailing them out last time. So they don't want to lose face and have Greece default or Greece be kicked out of the euro or leave the euro. They want Greece to remain in the eurozone, but by the same time they need to be firm in kind of getting them to abide by the rules. So a Greek exit, well, there will be fears of a crisis of confidence, not only in the Greek economy, but generally. I mean, say in Cyprus, for example, they suffered a crisis in 2012 and the banks had to be bailed out. Now Greece has been bailed out once. They're not going to be bailed out again if they default. So the risk obviously is that the Syriza government could refuse to repay the 17 billion euros that's due in a couple of months' time, and it will trigger a default and an exodus of investors from Greece. And ultimately, it will damage economic confidence not just in Greece but in Europe as a whole. ECB are unlikely, as I said, to offer Greece another bailout, which ultimately will put pressure on Greece themselves to shore up domestic banks. But in such a crisis, the only way I guess Greece could survive then is if they did leave the euro. So this is where the clash becomes kind of, the Syriza group is kind of, they say they don't want to leave the euro, but they don't want to pay back the debt. So if they don't pay back the debt, the only way they can survive or have any chance of survival is if they leave the euro. So some very tricky ground. And that's why in the long term a Greek exit might make Greece more competitive, but the immediate cost would be huge, and it would certainly undermine the confidence in the whole euro currency itself. Can we be certain that there'd be no economic contagion? Like we showed at the moment, the borrowing costs in Italy, Spain are at record lows, but the prospect of a Greek departure could really unnerve countries and the Eurozone market. What if Spain does fall back into trouble? What if Italy does fall back into trouble? What if Portugal does still fall back into trouble? They'll go, well, Greece left, didn't pay, we'll leave, and And the problem is because there's a currency union, right? But successful currency unions generally have to be governed by one political entity. Kind of in the US, they have the dollars, 52 states, they're all governed by essentially Obama, the White House. In Germany, when the reunification, or you have to be governed by one political entity for this to survive, because otherwise who's to say that there's an economic union and one currency, but governments can rule how their countries are run. So there's 19 current countries in the Eurozone, but 19 different people running the countries, but one central bank. And that's where the problem lies. So the contagion possible, one country leaving the euro will show that exit is possible, leading markets to believe that others might too. So problems, this creates problems for the ECB as well. So the Eurozone is essentially, as we saw yesterday, tipping into deflation. Oil price crashing have pushed inflation below zero, and it's probably likely to stay below zero. Obviously, ECB's medium-term inflation goal is 2%, close to, at or below, close to being below 2%. So as a result of this, there's growing pressure on the ECB to embark in QE. We've heard about this for weeks, months now. So Draghi's really caught in a horrible position here. He is itching to get QE pushed forward, trillion euros or whatever the talk is, on the 22nd of January, which is the ECB meeting, in order to try and head off deflationary forces. But to make a difference, they've ultimately got to buy sovereign bonds, right? So can Draghi really commit to buying Greek government bonds 3 days before an election where, as it says there, a party might come into power that has vowed to default on the bonds?
But the ECB is already full of Greek bonds.
But I mean, thing is, if they're going to embark, the ECB will need to change the rules, right? They can't just omit just Greece. If they're going to embark on a trillion euro of QE, they can't just say, okay, we'll buy these bonds, actually forget about Greece. How can they? I mean, they'd probably have to have some sort of allocation. So would they really want to buy bonds from a country that's, if the potential 3 days later for a party to come into power that's going to default? But then at the same time, they can't really exclude them, can they? I mean, to make, can you preempt essentially the result of a democratic election? They could exclude Greece and go, oh, but then they're trying to guess or or speculate on the outcome of the election, and that causes problems on its own. So this is why this is causing problems for the ECB. It seems like, you know, Europe needs QE, Draghi wants QE, but it's providing some ammunition for the likes of the Bundesbank and other ECB members who want to delay QE, who don't want it. So that's causing problems for the ECB. Okay, so now for us, obviously, it's the markets that we're concerned about. So before I go on to that, has anyone got any questions? That's kind of like a very broad overview. Yeah, Max.
Do we know when it's the next poll?
The thing is with this, it's like, you know, do you remember during the UK referendum, Swiss referendum, there were so many polls, right? They're not official polls. They're like this magazine, this newspaper, this. So it's kind of, they are coming. Yep, yeah.
Especially in Greece, the polls don't matter. Basically, everyone kind of knows what's going to happen.
Right.
It's just different, small difference.
We can ask Yanis then what he thinks, and that's probably the poll.
So we don't care before the 25th?
No, you don't. Like even with the Scottish referendum, where there's no official, it's just surveys, right? They take a sample of X amount of people and get the feedback.
Yeah,
so
usually it's 3%.
Yeah. Was it? I mean, that Scottish one, it wasn't always precise.
French people are doing it, it's precise.
Yeah, right, okay. Yeah. But again, it's a sample size, right? So, yeah, it's a sample size. But you can, you know, history will tell us in the markets that, you know, even if some random guy says, oh, Syriza's 10% ahead in the polls, the market will move. Okay, it might move only for 5-10 seconds, but it will move, and then someone will actually think, oh, actually this is the head of fisheries in I don't know,
so it's
in Mykonos or something, who said this.
It's going to be during the weekend.
The 25th. It's over the weekend. I think it's a Sunday.
We will know the results on Sunday night.
Sunday night. But the implications, I guess, although there'll be trading opportunities before then. If you remember, if you remember during the UK, the Scottish referendum on the pound, the Swiss referendum on the gold, you know, headline risk moved the markets, right? So that's where the opportunities will come. It could be from the polls, it could be a minister speaking about something. This is why it's really important to know who your parties are, Syriza, New Democrats, the other stuff which I haven't gone through that ITC has. Because if a comment comes out through Scorecard and says Syriza 2% ahead in the polls, do you know?
There are 2 or 3% ahead, but do we know how much is that? Is it like 30% or?
Oh yeah, I think it is. It was around 30%. Yeah, that's about the number. I don't know exactly, but from what I last read, I think that was 2 days ago I saw that. It was around 30%, yeah. So that's why you guys need to be switched on. Because if you don't know who Syriza is, you can't trade it. Or if the leader of Syriza, Tsipras, if a comment comes saying Tsipras says this, or you need to know who he is, what he stands for, just like Samaras, who he is, what he stands for. Because these comments are where we can beat the algos, guys. The algos can't trade this stuff. They can't trade comments. So just be ready, what I've gone through so far is just a fraction of what you guys need to know. But this is where you can make money, really, because we saw with the UK referendum, the Scottish referendum, we saw with the Swiss franc, there are opportunities, and most of them will probably come in the euro. What's happened in the euro over the last week, I guess a mixture of ECB, QE talk, lower oil prices, strong dollar, and possibility of Greek exit has ultimately caused the euro to sell off. I mean, most are viewing the Greek election in terms of a vote to stay in the euro or not. It's not really as crude as that, but that's what a lot of newspapers are talking about. If you look at the retail stuff, I say retail stuff on Google, BBC, are talking essentially about a vote for Syriza is a vote to leave the euro. It's not really like that, but the market is taking it a little bit like that. So if the market's taking it like that, it will trade like that. Maybe not forever, but for a while. Yeah, so with that's sort of how the euro should trade, very much like the pound did and the Swissy did. The euro stocks, ultimately equities prefer certainty. The Syriza government creates a lot of uncertainty, and a win for Syriza, or a sign of it, is likely to see the euro stocks come off, and vice versa. So although the actual result is on a Sunday night, there'll be so much whipsaw in the markets before then, comments, headlines, polls. So it's important to be tuning in. And I think what's probably most interesting is in the bond space, it's not quite as clear, but it'll be interesting to see if some of the peripheral bonds start to sell off. We showed from that chart there that Spanish yields, Italian yields, Portuguese yields haven't really done too much. But there were signs on Tuesday that of what we might see there. If you guys remember, there was an FT article that caught some focus, citing I think some research from, I don't know what think tank it was, suggesting that Syriza were on track to win quite comfortably. And Italian and Spanish bonds really came off, and they closed about 10 basis points wider versus the Bund. So we hadn't really seen that up to then, but you know, the sort of the trade to make money there, sell BTPs, buy Bund, being the kind of risk-off trade. We hadn't really seen anything like that until a couple of days ago. So it'll be interesting to keep watch of that, because if the peripherals start coming under pressure, it's maybe some sign of worries about the contagion thing. Okay, so let me just get very quickly get Delta up. Okay, so if we get the euro up, obviously there's been a lot of things driving the euro, as I said, ECB policy, the Greek issue, strong dollar. But if we look, okay, euro's been on a downward path for quite a while. Year end, last 2 weeks of the year, okay, you didn't really get very many big candles, but 29th here is ultimately when the talk of the Greek election, the date was released for the Greek election, when it was announced that the 25th of January would be when the election is. Since then, what's happened? There was a bit of stability, but since then it's been one-way traffic, the euro. One-way traffic. You know, you could say there's other things driving that as well, but there'd been other things driving it for a while, so it hasn't looked back. Obviously, the ECB policy as well, Draghi spoke around the same time too. If we look at, that's a daily chart, sorry. If we look at the euro stocks, again, we go to the 29th. We had 4 sessions of downward moves, and it was only today and yesterday we didn't really hear much about Greece, and that's kind of when it's bounced. So you know, on that day there was the day where that think tank article came out. Euro stocks don't like the uncertainty of this. It's bad for the euro, it's bad for Europe if that Syriza group comes in. So today and yesterday, didn't hear anything about it. The market's really bounced today, probably other reasons too. But that's just the impact it can have on equities. If we look at the Bund, the chart says 60 minutes, but it's a daily chart. Again, 29th, that's when the market picked up its rally. It's been rallying all year, but you know, it's stabilized for a week or two before 29th is day the Greek news came out. Bund rallies, continues to rally. Again, today we've come off as Greek news. Greece isn't really in the news today. And finally, the BTP. Where are we? 29th. So we didn't actually see we didn't see much in the euro, in the stocks, in the Bund. We saw the risk-off move straight away. We didn't see that in the BTP. Why? Maybe because initially the BTP didn't really react and just essentially rallied with the Bund, which it generally does. But then when the market gets and it starts to get a bit jittery, then the market started to go up. There we go. Yields higher. Oh, sorry. market starts to come off in terms of BTP. Market comes off, big candle there, down, again some stabilization today. But that's what can happen. Any questions? Okay. So I know we've been through a lot. Like I said, I'm no Greek expert, and you don't need to be Greek experts either. But for the next week and a half, this stuff is going to be important. You guys can make money in it. Greece has been impacting the markets quite significantly in the last week, 2 weeks, and it will continue to do so right up till the elections. So it's important, like I said, to keep abreast of what's going on, be aware. Definitely read I think there was an ITC piece two days ago. Definitely read that, because it goes through all the parties and you just need to know what they stand for. It's easy to be lazy and just have the first two, but if you guys really want to make money, like I said, this stuff, algos have no edge. This is where day traders have the edge. Someone like, you know, Wakas, Demetrius, they'll do their research. They'll know. They're great at trading comments, but you need to know who's saying what, who's significant. Sometimes, you know, some totally random guy, again, Ministry of Fisheries in Mykonos or something, might say something. The market might just blip, and then you actually think, actually, who is he? And then you can fade it. So even if you don't get the move up, you can get the move down, or vice versa. In whatever product, all of us here pretty much can trade the Bund or the Euro stocks, one of them at some point. Not many will have BTP limits, not many will have Euro limits, but for the guys on the sim, definitely just have a go. That's the only way you'll learn. And for the guys live, you know, just be ready to act. Yeah.
Is there any chance for Syriza to make a coalition?
Yeah, there is. There is a chance.
Who's friend with them?
I'm not sure, to be honest. I mean, the thing is with sorry?
Actually, it depends. It all comes down to how this week. Yeah, it depends on how things are going to form.
Yeah, I mean, it also depends on. Sorry. It also depends on how flexible Syriza are as well, because they're probably no one will say, yeah, we'll do what you want. They're very anti-Europe, anti-austerity, and no other party is like that. So they're gonna, which is why it's very unlikely that they would completely default or leave the euro, because they would have to compromise with another party to be able to come into power.
And with Germany as well.
Yeah, I mean, Merkel's in a tricky situation, because she won't want to be seen losing face. They bailed Greece out, but again, they need their debts to be repaid. So yeah, I mentioned the two main parties today, but please go away and read about the other ones. And like Giannis said, it'll probably be later in this week or early next week that we get a feel for who is going to side, if anyone, with Syriza to get their majority. Yeah, so different things obviously drive the market at different times. As I started with at the start, oil, Greece, Fed, ECB, those are the four things right now. And the ramifications on the market are potentially huge. So let's be prepped, let's be ready to act, let's make some money out of this. And I think at Futex, some of us did okay on the Scottish referendum stuff, which is good. I want all of us to be able to do well out of this. Not so many really paid that much attention to the Swiss stuff, which, you know, again, there were opportunities. A few did, but not many did. This is something that, you know, you can all make money out of. You should all be prepped. For the next week and a half, there will be opportunities. I think that's me done. Any further questions on this stuff? Obviously, I've given you some handouts with the slides there. If there's anything you're unsure about, you can ask me at any time. Or our resident Greek here, who will probably get a lot of people knocking on his door this week and next week. But seriously, guys, all jokes aside, this is stuff we can make money out of. So let's not be lazy.
Is it ready? Greek are ready to vote the left party, in your opinion? Is
The what?
A left party. Are ready to vote a left party because I know that since 10 years they are voting the
thing
right.
is that Syriza is not a left party anymore. It's more in the center because it changed. It started as left party, like extreme left, and through time that passed, changed a lot of its opinion.
The money they
And now-
receive.
Yeah.
Yeah.
So now it's more in the center, so that's why I'm not too worried that it's gonna do something stupid like say we're not paying anything. But again, extreme
Exactly.
left
They like I said,
Stupid.
they need Europe. That's why previously they were like, who cares? That's why they kind of say they want to stay in Europe,
They
but
live
again,
better without the euro.
sorry.
They live better without the euro.
Yeah, well, that's debatable because they were misreporting everything, weren't they? Yeah, it was only when they got caught out during the financial crisis. It was pre-Euro that they were spending all this money and just weren't reporting it properly, and they run out of money. They lived better without the euro. Yeah, they did. The guys who are but people are feeling it now, whether they were in the euro or not. They wouldn't have been bailed out probably if they weren't in the euro, or to a lesser extent. In whose interest is it to give them money if they're not with them? Any other questions? All right, guys. Well, I hope this helped. The aim from me is to give more of these kind of, maybe not as an end of day debrief, but definitely some of these more macro drivers. Like I said, I did the oil one a few weeks back, and just stuff that's topical and potentially market moving. I'll generally do like a workshop on it. Yep. So if again this will be broadcast on the FutexLive website probably from tomorrow. If you want to go through it again, you've got your notes, and obviously just do your own research too. All right, guys. Thanks very much.
Okay, cheers.